What's going on, everyone? We have a pretty important filing to talk about out of NASDAQ. This one is SR NASDAQ 2022-017. They're basically adding categories of regulatory halts, and they're also adding a lot of new definitions. And we're going to go ahead and take a look at what this is all about. When it's concerning operational halts, that is something that you need to pay attention to. This was filed today, May 3rd. This is not filed immediately. And the full title of this filing is Notice of Filing of Amendment Number 1 to a Proposed Rule Change to Modify Equity 4, Section 4120, to add categories of regulatory and operational halts, to reorganize the remaining text of the rule, and to make conforming changes to related rules. So a little background on this. The exchange has been working with other SROs, which are self-regulatory organizations, people like DTC, OCC, NSCC. Those are SROs. They've been working with them to establish common criteria and procedures for halting and resuming trading in equity securities in the event of regulatory or operational issues. These common standards are designed to ensure that events which might impact multiple exchanges are handled in a consistent manner that is transparent. The exchange believes that implementation of these common standards will assist the SROs in maintaining fair and orderly markets. Notwithstanding the development of these common standards, NASDAQ will retain discretion in certain instances as to whether and how to handle halts, as is discussed below. Every U.S. listed equity security has its primary listing on a specific stock exchange that is responsible for a number of regulatory functions. While the core responsibilities remain with the primary listing venue, trading in the security can occur on multiple exchanges that have unlisted trading privileges for the security or in the over-the-counter market, like, for example, GameStop. That is why you see GameStop showing up trading underneath Tier 1 NMS over-the-counter stocks, because GameStop was added to the UTP plan back in 2005. I made a video on this a while back. Because it's a rule, that is why you see them traded over the counter. So this is relevant. Now, all SROs have rules that require them to honor a regulatory halt. NASDAQ, as a primary listing market, also has rules outlining the circumstances in which it will halt trading in its listed securities, including situations in which such halts are for regulatory purposes, and therefore are applicable to all markets trading in the security, or for operational purposes, which would not halt trading on other markets. So keep that in mind. If it's operational, it will not take place as far as the halt on other markets. However, the trading halt rules are not consistent across SROs, which is the lifeblood of this filing. They're trying to get consistency throughout their halting processes. Now, such inconsistency among exchange rules could lead to confusion in circumstances such as a cross-market event, which could be deemed, a new definition found herein, extraordinary market activity. Now, this supernote here, NASDAQ's current Rule 4120 establishes a limited number of reasons for instituting a regulatory halt for a NASDAQ-listed security, and these are the reasons right here. Number 1, to permit the dissemination of material news concerning a listed company with respect to an ADR, or American Depository Receipt, listed on NASDAQ, where another U.S. or foreign exchange that lists the security or the security underlying the ADR imposes a regulatory halt on the security listed on its market. Also, they can halt when, such as the execution of a series of transactions for a significant dollar value, is at prices substantially unrelated to the current market for the security, that is likely to have a material effect on the market for that security, and the exchange believes it is caused by the misuse or malfunction of an electronic quotation, communication, reporting, or execution system operated by or linked to NASDAQ or another market. And they can also do a halt in the event of an initial public offering with respect to an index warrant under certain specified conditions, or when appropriate in the interest of a fair and orderly market. They can also halt with respect to certain derivative securities products, and also when certain pricing information concerning the instrument is not available or is not being disseminated to all market participants at the same time. For example, the current definition of extraordinary market activity focuses on events where trading occurs significantly away from pre-event market prices. However, there may be other situations where trading proceeds in an ordinary fashion despite a computer error that causes duplicative orders, bad data, or other erroneous information that could impact investors' understanding of the market or their trading activity. The exchange believes it would facilitate fair and orderly markets to give primary listing markets greater flexibility to control the facts and circumstances of each case and decide whether a regulatory halt is appropriate. So that's basically your background. Now, this is the reasoning for moving forward on this. The complex and interconnected market structure in the United States also relies on consolidated market data processed and disseminated by the SIPs. Now, SIP stands for Securities Processor. In certain circumstances, the loss of this information, Securities Information Processor. That's what SIP stands for. Now, in certain circumstances, the loss of this information or issues with the accuracy or timeliness of the information might cause a primary listing market to determine that a trading halt is appropriate. The exchange believes that further guidance in the rules will assist market participants in better understanding how various scenarios would be handled, which is what we want to know as readers of this document. We want to know how these situations are going to be handled. That's why we're looking at this. Now, the purpose of this. NASDAQ proposes to reorganize and amend Rule 4120 entitled Limit Up, Limit Down Plan and Trading Halts. The rule sets forth NASDAQ's authority, again, to halt trading under various circumstances. The exchange is a participant of the Transaction Reporting Plan governing Tape C securities, which is referred to as the NASDAQ UTP plan. That's what it is. And UTP stands for Unlisted Trading Privileges. GameStop holders, GameStop's a part of the UTP plan. Now, Supernote 8 here says each transaction reporting plan has a Securities Information Processor, SIP, responsible for consolidation of information for the plan's securities, pursuant to Rule 603 of Regulation NMS, which is National Market Securities. Now, the transaction reporting plan for NASDAQ-listed securities is known as the Joint Self-Regulatory Organization Plan governing the collection, consolidation, and dissemination of quotation and transaction information for NASDAQ-listed securities traded on exchange on an unlisted trading privilege basis, or, as referred to up here, the NASDAQ UTP plan. Pursuant to this plan, the UTP Securities Information Processor, which is NASDAQ, consolidates order and trade data from all markets trading NASDAQ securities. The exchange uses the term UTP SIP herein when referring specifically to the SIP responsible for consolidation of information in NASDAQ securities. Now, if you're wondering what Tape C is, Tape C represents NASDAQ-listed stocks, and it also traded on NYSE. So, NASDAQ-listed stocks that also trade on NYSE or NASDAQ-listed stocks referred to as the Tape C securities. Now, this is where we get into the definitions. They've added several. Basically, NASDAQ is proposing to adopt primary listing market as a new term defined in NASDAQ UTP Plan Section X.A.8 as follows. The National Securities Exchange on which an eligible security is listed. If an eligible security is listed on more than one national securities exchange, primary listing market means the exchange on which the security has been listed the longest. So let's say there's a Chinese stock over here in the United States, like GoTo, and they want to pursue dual listing. Well, the primary listing market would be the NYSE because that's where they were first listed, and that's where they've been listed the longest. New definition. They're also adding in these definitions here. They're adding in regulatory halt, processor, extraordinary market activity, SIP outage, SIP halt resume time, SIP halt, regular trading hours, operating committee, material SIP latency, operational halt, and as we just defined above, the primary listing market. These are all relevant terms that need to be learned because they're going to be used as excuses later, and if you didn't know about it beforehand, you really don't have any options. So you want to know what this stuff is ahead of time before it's approved, which is why we're doing this. Now let's look at these definitions real quick. So they took up a lot of space in the filing defining this one. I may need to make a separate video on this in and of itself, but basically a summary, TLDR if you will. The exchange proposes to replace the definition of extraordinary market activity with a broader definition of the term taken from the amended NASDAQ UTP plan. The new definition updates and consolidates the terminology and broadens applicability of the term in comparison to the current definition by making it clear that extraordinary market activity may occur solely on the exchange or multiple markets, referred to as trading centers, in the proposed rule change. So it's trading center related. And now trading centers refer to a national securities exchange or national securities association that operates an SRO, which again is a self-regulatory organization, trading facility, an alternative trading system, an exchange market maker, an over-the-counter market, or any other broker-dealer that executes orders internally by trading as principal or crossing orders as agent. So any of your broker-dealers, market makers, SROs, anyone that's handling orders cross-market, that is going to be your trading center definition there. Now, the definitions of SIP outage, material SIP latency, SIP halt, resume time, and SIP halt are intended to provide additional guidance and specific processes to address this subject of potential market issues. In addition, the exchange is proposing to define terms related to SIP governance needed in order to understand these definitions. So processor or SIP have the same meaning as the term processor set forth in the NASDAQ plan, namely the entity selected by the participants to perform the processing functions. That's what a processor is. Because the terms processor and SIP are also used throughout the rules, at times to apply the processors of information furnished pursuant to the CTA plan, the term processor and SIP may, in those applicable circumstances, refer to the processor of transactions in Tape A and Tape B securities as set forth in the CTA plan. Now, Tape A is NYSE listed stocks. NYSE Tape A represents a venue for all Tape A stocks. Tape B is the regionals. Most of Tape V is on NYSE Arca, which is a subsidiary of NYSE. And nowadays, though some of it is still on the NYSE market, formerly known as Amex. Operating committee is defined as having the same meaning as in the NASDAQ UTP plan, namely the committee charged with administering the NASDAQ UTP plan. Okay. The exchange is proposing to adopt a category of regulatory halt called a SIP halt, a regulatory halt to trading in one or more securities that a primary listing market declares in the event of a SIP outage or material SIP latency. So they're literally defining a new definition using new definitions inside of the new definition. That's hilarious. So this new category of regulatory halt will address situations where the primary listing market declares a regulatory halt in one or more securities as a result of newly defined terms that we don't know what they mean yet. Perfect. The exchange is proposing to define SIP outage to mean a situation in which the processor has ceased or anticipates being unable to provide updated and or accurate quotation or last sale price information in one or more securities for a material period that exceeds the time thresholds for an orderly failover to backup facilities established by mutual agreement among the processor, the primary listing market for the affected securities, and the operating committee, unless the primary listing market, in consultation with the processor and operating committee, determines that resumption of accurate data is expected in the near future. So basically all that word salad just means if the data is wrong, they're going to halt until the data is accurate again. I don't know why they're going to list these 300 page long definitions. Ridiculous. The exchange is proposing to define material SIP latency to mean a delay of quotation or last sale price information in one or more securities between the time data is received by the processor and the time the processor disseminates the data over the processor's vendor lines, which delay the primary listing market in consultation with and in accordance with publicly disclosed guidelines established by the operating committee, which are A, material, and B, unlikely to be resolved in the near future. Dear God. Okay, the exchange has proposed to define regulatory halt to mean a halt declared by the primary listing market in trading in one or more securities on all trading centers, which remember, we just defined those a second ago, for regulatory purposes, including for the dissemination of material news, news pending, suspensions, or where otherwise necessary to maintain a fair and orderly market. The term regular trading hours is referring to the session that begins at approximately 4 p.m. Now, the addition of the term approximately, they're literally adding that word in because it reflects the fact that the NASDAQ closing cross, which precedes the post-market session at 4 p.m., is not instantaneous. Next, we have operational halt. It's a halt in trading in one or more securities on... Oh, I thought we already did this one. Last but not least, the term processor may, in those applicable circumstances, refer to, again, the processor of transactions in Tape A and B, which we defined a second ago. So now we're going to get into the regulatory halt types that they're going to be amending and creating here. The first category concerns situations enumerated in the SIP plan specifically related to a SIP outage, material SIP latency, or extraordinary market activity. The second category provides the exchange with discretion to declare a regulatory halt in situations described by the proposed rule, such as when the exchange requests certain information from an issuer and for securities subject to an initial public offering. Proposed Rule 4120B1B VI gives the exchange discretion to halt trading in an American Depository Receipt, otherwise known as an ADR, let's go China, or other NASDAQ-listed securities, when the foreign securities exchange or market listing the security underlying the ADR or NASDAQ-listed security institutes a halt for regulatory reasons. So if they halt it, then it gives NASDAQ the discretion to halt it. But, however, they're not adding this, they are deleting text that presently exists in this rule covering ADR and other NASDAQ-listed security halts at Rule 4120A4, which references national securities exchanges instituting a halt for regulatory reasons, because under the proposed new rule, a regulatory halt will be issued by the newly defined primary listing exchange, which, as we just defined, is going to be the one that's been listed the longest. Now, if this happens, then the exchange will then assess the regulatory reasons underlying the halt on the foreign market and possibly, I like how they put possibly, initiate a regulatory halt. Jack to the tits. See everyone, I'm still jacked, just for different reasons. Now, the third category of halts will occur in situations where the exchange becomes aware that the net asset value, otherwise known as NAV, of a derivative security product, like an ETF, or the disclosed portfolio in the case of a managed fund share, the composition file in the case of Next shares, or in the case of proxy portfolio securities, which was a filing that was defined last year. A proxy basket, which is another term created and defined last year, or the fund's portfolio. Now, this category of halt will occur when all of those products I just mentioned are not being disseminated to all participants at the same time. Disseminated means to disperse information to. Now, the exchange is required to halt trading in the derivative securities products when this occurs. Whenever information is not being disseminated to all participants at the same time, that's when the third category of halts would occur. Now, in essence, the exchange has been working with other SROs to establish common criteria and procedures for halting and resuming trading in equity securities in the event of regulatory or operational issues. The trading halt rules are not consistent currently. Such inconsistency among exchange rules could lead to confusion in circumstances such as a cross-market event, which could be deemed extraordinary market activity. They also define a lot of new terms herein and created new categories of regulatory halts that are very relevant. The proposed rule change clarifies and broadens the circumstances, basically, in which the exchange may impose such halts as defined herein, and specifies procedures for both imposing and lifting them. If you would like to read more of this filing, I will link it down below. Thanks for watching, and I will get another one out as soon as a relevant one comes about. Thanks for watching.